Since the Stone Age, mankind tried making a fortune by trading, but as the market evolved over millennia, they discovered a powerful tool: options. And so in ancient Greece began a separate sect of traders, options traders. Through generations they passed their knowledge of immense losses and gains, training tirelessly hoping to master this craft. Yet only a brave few with nothing to lose rose to the top, leaving behind tales of both glory and despair. And it is my honor to present to a trader who turned just $3,000 into $300,000 in 1 month. He goes by the name of Tripster, but this incredible gain is just a small speck on his journey full of unimaginable gains and losses. And it all started 3 years ago when he turned just $200 into $600,000 in less than a month. Yes, you heard that right. On January 12, 2021, he had just $200.96, and on January 31st, his account was worth $595,099.87. And judging by that time frame, you can probably guess how he made so much money. Yes, it started with 0-day sale expiry calls on GameStop. He then flipped into BlackBerry with more FDs, and since the 22nd he's been all in on GameStop calls and was rolling them out. He got his account to $1 million, put it all into index funds, and has been living happily off of passive income ever since. Hell no, just as fast as his account went up, it came crashing down, and next year he posted a loss of 98% or $746,648.05 and was left with about $10,000. But this is just the tail end. In fact, he got the $200 up to almost $150,000 at the height of GameStop mania, and subsequently watched his options get crushed and he gambled away the rest. It was fun. He didn't need the money, although that doesn't mean he didn't want it. So yeah, when his account hit the high of $950,000, the news broke about Robinhood halting trades. And after that, losing money was way easier than gaining it. Can you even imagine turning just a measly $200 into almost $1 million and giving it all away? Could you handle that emotional toll? And on top of that, just imagine adding this. Given how many times he had already doubled his money, he was looking to exit on the same day that Robinhood halted trading. That would crack most people beyond repair. But he's a different breed. Quitting isn't an option, so he took time off and prepared, trained for the next opportunity. And then after 2 years of complete silence, he came back with $3,000 and an unbreakable will to win. He started playing block leaps because he liked the chart and thought it was ready to test $80 with all the small businesses he saw using it, plus their Bitcoin holding and layoffs to appease investors. That's how he turned $3K into $17,000, and then he put it all on earnings. Somehow he was right, as the stock jumped up by 16%, making him a 1,478% or a $54,270 gain, bringing his account to $57,140.45. But despite his chart going literally straight up at the end, he gathered the will to keep going. And in spite of his experience with not quitting while ahead, he was not done yet. No, he had a bit of left in his tank, so he went all in, full ported into 75 Dell call options with a strike price at $90 just 3 days before the earnings report. Once again, he was spot on, as the stock jumped up by more than 25% to $120, making him a $234,000 gain in just a day and a $300,000 gain for the month, bringing his final account value to $304,000. Okay, but why did he go all in on such a random stock before the earnings? Did he actually know what was going to happen, or was it just a gamble? Well, they have Nvidia chips in their infrastructure products and seemed under the radar compared to the boom in other AI stocks. That plus Michael Dell is a beast of a CEO and had beaten the last 3 or 4 quarters. Plus he likes to gamble, although he was actually hoping the stock would hit $100 to $105, but he got lucky and cashed out at $130 at open. But you see, there is an even crazier story about a trader who made a comeback by doing the most WallStreetBets thing possible. He goes by the name of Boss F82, and he unfortunately got laid off. Or I guess he'd probably consider it a happy moment now, because with nothing to lose he did the most genius decision ever and dumped his entire severance and 401k into his first option play, making him an insanely high $265,460 in just a day, and on top of that he grew his account from just $40k to more than $600,000 in just a year. He got dumped by by his company at the end of 2022 and was given about 15k after tax severance, and on top of that he had around 20k to roll over into an IRA. Now instead of looking for a job, he was sitting around jobless, trying to figure out what shares to buy for his IRA. Now keep in mind that he has never touched options before. There was a major event around this time, like it was fate involving a Viking competitor. He had been in and out of Viking since 2016 as they are a fabulous small company, but that event inspired him to dump all his 401k rollover cash into its shares. At the time the stock was trading at about $3 and had a market cap of just $300 million. But despite that, he decided to dump a lot of money into this extremely risky play. In fact, he was so supremely confident in Viking that the thought started to fondle his mind that he should buy options. And he finally mustered the courage in January 2023 to spend all his severance plus 10k of his own cash into about 230 contracts for May and June. By then, the stock had already more than doubled and risen up to $9, but the company was still small and had a market cap of only $900 million. And he still decided to dump about 29k into not shares but call options with a strike price at $16, meaning that he went far out of the money on this small biotech stock. Well, his bet started paying off very fast, because Viking released amazing obesity data in March and he was deep in the money. But instead of selling and locking in his profits, he decided to hold, because he didn't actually buy them for obesity but for their previous major focus, NASH, which was releasing data in the spring. The NASH pop wasn't as big as he would have liked with his huge stack, but he still got out, turning the severance into 176k plus his IRA shares. And then Viking and Bio overall took a beating throughout summer and early fall as Viking went from an NASH focused company to obesity. He then began to plan for his winter 2023-24 moves and loaded up on about 200 January calls fairly cheap, with Viking set to release data in November and December or early January. But sadly, things don't always go according to plan, because Viking then later in the fall announced all trial data will be pushed into 2024, which crushes his January calls to zero. But by some miracle the share price recovered a bit and he got out with 10k or about 50 cents on the dollar. So he rolled into March and May calls, and his leverage wasn't as great this time, but it was good enough as it climbs and climbs, blowing his strikes out of the water, culminating with the amazing obesity data as the company released results for phase 2 trial of its weight loss drug, which produced statistically significant reductions in body weight, pushing the stock to more than $80. Now he was honestly a rank before the results, because he had already 10x'd and felt like a total crazy man still holding, but he always bought in to hold through data and was committed to that, and thankfully it worked out. So he got laid off and got inspired to go all into Viking and netted around 600k in a set of 9 month trades. And for anyone trying to repeat what he did, here is his advice. You have to commit yourself to following the industry at least somewhat and learning about nuances of the companies, the competition, the data and the expectations. When you get to know companies and their peers, you can tell if they're underpriced or overpriced. And if you want to see how this trader made $18 million in just 3 months, click on the video just popped up. If you like my content, make sure to subscribe, and if you have any questions or recommendations, leave me comments down below, and thanks for watching.